Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and we're going to talk about Warren Buffett's growing cash pile in a different way. He's long lamented that it's hard for him to deploy the money. I have a different take on why it's so hard and a way we can play in the market that he can't.
Blah, blah, blah.
Two stupid guys trade stocks.
All right. So a couple of things kind of come up recently that kind of spurred me towards making this video. One of which is Berkshire Hathaway's most recent quarterly earnings, where I don't know if you follow it, but basically they have $189 billion in cash sitting on their balance sheet right now. And Buffett's talked a long time about how he can't efficiently deploy it. He's too large. He needs investments that'll move the needle, but everything that in the market segment that would move the needle for him, a company of his size, is too expensive. All right. So this is a little bit about areas of the market that are less expensive than others, and one of the ways in which I'm playing it with my own retirement funds.
Okay, all right. So you have stake in this. Okay.
Yeah, yeah, absolutely. I kind of will talk about it at the end.
What
So,
a
so
problem to have, though. I have too much cash. I just don't
well,
know how to deploy it.
get this. This is showing you where his mindset's at. Obviously, right now, 189 billion earning 5% U.S. Treasuries is pretty sexy, right?
Hmm. Yes.
Yeah. But he said even if rates were only 1%, he would still be holding 189 billion right now. What does that tell you?
He has zero faith in the prices of the stock market right now.
He certainly is having a hard time finding any worthwhile investments that meet his criteria, which is crazy to think about.
Nickel is
Um,
at 60 cents. So, okay.
I mean, solid plan. That would basically be a pittance. So this chart is comparing large cap and small cap U.S. equities. Right? Buffett's kind of restrained that he has to really basically play in this large cap space in order to move the needle for him. We as smaller investors obviously can be a little bit more nimble and play in small caps, but small caps are much less covered and much less individual stocks that are reported on are within the small cap sector. So it would kind of behoove you to be a little bit more broad based in your small cap investments there. So that's kind of really where I'm at is small cap like index funds. But look at this spread here. There are going to be a few data points on some of the next slides about just how historic the moment is right now for small caps compared to large caps in terms of valuations.
So it looks like the last time it was this bad, or I guess not this bad, but close to this bad, it was 2001 from this
Yeah,
graph.
you're looking at the dot com like bubble basically.
Okay.
Easy to think about. So, yeah, a few different reports here, but so I don't even know who Pinnacle Associates is, but the widening gap began in December 2016. In the subsequent 7 years, ending November 30th, small caps returned 46% compared to the S&P 500, generating 130%. They've lagged behind by like 80 plus percent over the last, was that 7 years? Crazy, huh?
So is this a trend that'll be here to stay, or is this an outlier? Because I will say that the SPY and the Qs have gained that much because of like 8 companies, which we've talked
Uh huh.
about a couple
Yeah.
times. And then
Yeah.
on top of
Mag
that,
7 right there.
those 8 companies buy other companies that are in the smaller caps index and then get their
Sure.
gains.
Yeah, yeah, that's absolutely true. We have talked a lot about the concentration in equities, particularly for the S&P 500, how it's gotten smaller and smaller, and how like the top like 10 companies is like over 33%, I want to say, of the index at this point, and it's even worse for the triple Qs where it was like almost
I think
50%
it was like
was
47 or something.
yeah, yep, that's the numbers I remember. So look at valuations though for a second here. So S&P 600 small cap index 13x PE compared to the 19x for the S&P 500, whereas you got the Mag 7 chilling out here at a 32x PE. Interesting, huh?
I I do think Tesla skews that quite a bit. I think that number is
Well,
not fair.
Nvidia
The
probably
video, yeah.
even
I'll
more
look that
so
up.
than that at this point. Um, but you're looking at the larger, kind of more well-known small cap index, the Russell 2000, and now that one has a PE of 15 as of the time of this article. Much more in line with what you historically like to see the valuations for companies. Um, so the last time this index traded at this level was over a decade ago, December 2012. Russell's relative PE trades at 21% discount to large caps, 21% cheaper in small caps right now compared to large caps.
I did look it up. Tesla currently 43 PE, Nvidia 75. So it's definitely throwing that number kind of off.
Absolutely. So this is reiterating what we just talked about. 33% of S&P 500 is just basically 10 companies. And then when we look at the returns, this is always an interesting question, right? So S&P 500 returns in the 12 months after the 1973 and 2000 crashes fell 23 and 18% respectively. But over 7 periods of extreme concentration in the past century, including 32, 39, 64, 2009, 2020, average returns are 23% higher in the 12 months after. So this is saying concentration isn't necessarily a problem. All right. That's
Okay.
what this particular data point here is saying. Historical episodes of elevated concentration were followed by S&P 500 rallies more often than corrections. That's an interesting one, right? So still plenty of room to run. It's not like abandon ship on the S&P 500 and buy only small caps, but it's definitely something where it makes you question the valuations you're getting for your money, right?
Okay.
This is if you like looking at the outperformance of the Mag 7 here. This is we actually I think talked about this last year, but this was actually looking at the Mag 7 versus the other 493 companies in the S&P 500.
Yeah. It's Nvidia's just crazy, and Meta, because Meta is up I think 400% in a year. So
Yeah,
it really changes these graphs
from
quite
the
dramatically.
market bottom. Exactly. All right. So the real question as far as like outperformance here, right? So this is why I have actually been investing in small cap ETFs for a while. But Jeffries analyzed 7 similar periods of significant underperformance of small cap versus large cap. On average, after these difficult periods, small caps outperformed large caps by 22%, 10.5%, and 9.8% over 1, 3, and 5 year periods.
Okay. I mean, that's pretty significant.
I'm
What's the Russell
assuming you're typing on your
2000?
keyboard right now to find some small cap indexes to buy, right?
I wanted to see the price of the Russell 2000.
I think it's actually around 2000 to be
It's
honest.
2059. Yeah.
Yeah. It is one I do track. In the past, small caps often begin outperforming as the market begins anticipating Fed rate cuts. So
Okay.
yeah, very
All
similar to
right.
your TLT trade. Yeah. Um, According to Morningstar, Russell 2000 has an annualized 25% gain during these time periods, increasing growth and slowing inflation since the 1970s, outpacing the S&P 500 at 17.3%. So like 8% outperformance over those time periods where you're now seeing Fed rate cuts.
This is looking pretty good to me.
Yeah. Yeah. So these are basically how I've this, all right. So as far as money that I'm contributing towards my workplace IRA, I'm 401k. Sorry, about 15% of it goes to the small cap index. So the hard part with workplace 401ks is you have to pick and choose amongst the options that they give you, right? So they
Yeah,
may not have something that's perfectly suited to what you want to invest in.
I hate
And I'm
that,
always
by the way.
yeah, absolutely. I don't like target date funds, and I don't really like anything with sort of high fees, right? Because there's analysis out there saying that the average 401k individual pays like $120,000 in hidden fees over their investing career, which is
Yeah,
bananas.
it's a complete scam. The fact that you can't choose what exactly you want in your 401k is the dumbest thing I've ever. It's so
Yeah.
stupid.
So Roth IRA, which I'm contributing to now, I split 50-50 between S&P 500 index and a VT, which is the total world stock market index, which includes large caps, small caps, and international equities. All right, it's still mostly weighted towards large cap U.S. stocks, but you are getting a little bit more broad exposure by doing that. I set up my wife the same way exactly. And then her 401k actually amongst the option seat she has for low cost index funds, I have it split between a Vanguard value index fund and a Vanguard small cap index fund. So it's a 50-50 mix because they're both some of the cheapest options in her 401k plan that are available.
So the question is, as of right now, would you feel more comfortable if you had $10,000, just an even number, buying triple Qs, Russell 2000, or a leveraged 3x triple Qs?
It would be the Russell 2000 would be my answer there.
Wow. Okay.
Yeah.
All right.
Yeah, absolutely.
Fair enough. Even with the AI ramp up.
Absolutely. I still, you have to kind of look at your total investments overall because my main, IRA that I talk about on this channel a lot of times where I own individual stocks is heavily kind of weighted towards large cap US tech stocks that I bought at time periods where I thought they were undervalued. All right. And I'm just planning on holding them and selling covered calls against them. That's basically my strategy there. So I have enough exposure, I think, in that realm that I would not want to continue adding to that.
What if you were just entering the stock market?
If
And
I
you
were
had to
just entering
choose.
the stock
Yeah,
market,
zero money in it. You had to choose between Qs and the Russell 2000. You have a 5-year period.
a 5-year time horizon,
Mm-hmm.
oh, that does complicate things. I mean, based upon the data we're seeing here, I would have to say Russell 2000 at this point in time.
Wow.
But yeah, I know. I mean, we'll see when the AI actually comes to fruition as far as profits, but who
Okay.
knows?
Bold comment. Let's see what they say. All right, guys. Have a good one.
Catch you next one.